Hey guys, it's Aman
and Christina
from
Our Rich Journey. In this video, we are going to be talking to you about the rules that we apply when we invest in the stock market. Now, there, I think, is a lot of chaos going on about the stock market right now, and we've been investing in the stock market for the last about 20 years. So we want to talk to you about the rules that we apply when we invest in the stock market.
So as Christina mentioned, we have been investing for about 20 years. So I guess you could call us seasoned investors. What we are not are financial advisors. So the rules we're going to go over are rules that we have developed throughout the years based off of our experience and after educating ourselves on the stock market. So our number one rule is diversify your investments. And when we say diversify your investments, we mean don't only invest in the stock market. In fact, we invest in stocks, bonds, real estate, and we also have other passive income sources. So people talk a lot about diversification, but we apply that across our entire portfolio of investments.
If you've watched our videos, you see that we have videos on investing in real estate and also in the stock market. We recently did a stock market investment video where we invested $10,000 in the stock market in individual stocks. And the reason why I bring this up is because it goes towards our diversification rule. We got a lot of comments about our $10,000 investment in the stock market, a ton of comments. But I think one of the things that I really want to point out is that that makes up a very small, tiny portion of our entire portfolio of investments. So again, the key to us is diversification. And this brings us to our second rule. When you have diversification and you don't put all your eggs into one basket, you don't need to panic if one basket is sort of lower than another. So this is our second rule. Don't panic if you have money in the stock market and the stock market fluctuates.
So on average, the market has a correction about once a year. And those corrections can be about a 13% drop in the stock market. So we know that those types of things will happen. And when we invest, we are prepared for that. The other thing is those corrections that a lot of people tend to panic over don't necessarily lead to a long-term bear market.
And this leads perfectly into our third rule, which is if there is a bear market, historically, the stock market has always rebounded.
And this is an excellent point that I think a lot of people tend to overlook when the market is going down. They forget that the market will also rebound. And in fact, throughout history, the rebounds have been significant. On average, about 32%.
If you're worried about bear and bull markets, you're probably more interested in short-term investments. Our investments are always for long-term, at least for stock market investments. So the way to get rid of worrying about bear and bull markets is to put your money in and leave it in the stock market long-term. Rule number 4 is don't watch the news. Okay, so the news will create panic, and panic creates the urge to sell your stocks, to get rid of it, even if it's at a loss. So don't watch the news. If you're intending to invest long term, it really doesn't matter what happens tomorrow or the next day. Like I said, if it's a bear market or a bull market, if you don't watch the news, you won't panic sell.
And you know what? The news will just stress you out. You should not be looking at your investments every single day. And when you watch the news, you tend to go check your investments and check your stocks. That's something that we don't do. And number 5 is falling for the buy high, sell low trap. So what this is that when people see the stock market shoot up significantly in one day, they want to jump on that bandwagon and buy the stocks. They're buying them high. When in fact, what they should be doing is being consistent with their initial plan. On the other end is the people that sell their stocks when they see the stock market drop significantly in one day. Those people are panic selling. They're selling because they feel like the stock market is going to fall till forever. And that's what we call selling low.
The idea behind the buy high and sell low trap is that it's emotionally buying and selling. You shouldn't buy and sell because of some emotional urge that you have to do it. If you stick to your plan and you do it long term, you're better off. Number 6 is understand that everyone has their own opinion. Everyone has an opinion on how they should be investing their money, and they have opinions on how you should be investing your money as well.
Yeah, we saw this a lot with our most recent video on the high dividend stocks, where people made some recommendations, and we love to hear those types of recommendations. But you can get one end of the spectrum where you have people saying, your portfolio is terrible or your portfolio is great. But what we try to focus on is the research that we've done. Sometimes, you often hear, don't take the opinion of the water cooler conversation. But what we really want to focus on is that opinions can vary, but what you need to stand by is your own research.
I think the emphasis for us is that we know our investments, we know our money better than anyone else. So if we do our own research and we understand how we're diversifying and where we're putting our money in, our opinion is the most important opinion to us. And our 7th rule is you must put your money to work. In our video about investing $10,000 in the stock market, we had one person that commented and said, scared money don't make money. And I think that really encapsulates this rule.
Yeah, I really love that comment that he made. And I think you should say it with more swagger, okay? Scared money don't make money. That is the realest comment I have ever heard, because it encapsulates something that I think a lot of us take for granted, is that if your money is sitting on the sideline, then it's not working for you. So we believe strongly in that every dollar has a job. And we love to put our money to work in real estate, in stocks, and other passive income businesses. So the idea of scared money doesn't make money means that if you are afraid to invest, then you will never achieve wealth. And number 8 is that we know that whenever the stock market goes down and our portfolio is negative, it's just paper losses. Meaning that you don't lose until you sell. So when you hear people say you're losing a lot of money in the stock market, when we think of that, those are the people that have sold low. But we're long-term investors, so we're not selling our stocks. And so we're not selling our stocks at a loss.
So, of course, we recognize that stock values can go down, but we don't recognize it as a loss unless we sell it as a loss.
And this really encapsulates our whole investing philosophy, is that we are long-term investors. So over the past couple of days, the couple of weeks, and the last couple of months, we've all seen the stock market fluctuate significantly. But if you are a long-term investor, these fluctuations are natural, and you are not afraid. Because over the long run, we know that the stock market always goes up. History has told us this. So those are our 8 rules for investing in the stock market. These are our rules, and we devise these rules as a part of our investment plan. Everyone that invests should have an investment plan. You should not be kind of making this up as you go along. So what we suggest is that you sit down and you devise your own plan, your own set of rules. You can do that by yourself, or you can do that with a financial advisor.
So if you like what you heard, make sure you give us a thumbs up, subscribe to our channel, and
join the journey.